It's Friday. This is the Brew. We have Paulina on with us today, and it is return of the meme stocks. We're going to get right into it right now. Oh, I'm waiting for the music to do my thing. No music to do my thing. Oh.
Hey, Lex. Hey, Paulina.
Hi, Paulina. Hi, Mal. How are you guys?
Good. We missed you. We feel like you've been on vacation or something.
Me? Yeah, I was on vacation. I went golfing, just a little golf trip. I jammed a lot in a day and a half. What can I say?
I like it. I like it.
Paulina,
so
it looks like you're getting ready to go out after this. My God.
She looks good. See, I told you.
No, I just want to look good for you guys. That's the only reason why
Oh, come on. How are you? So we're going to talk meme stocks. I got to be honest. First of all, I don't know what a meme is. Sorry. I just pushed it in what is a meme. And I think I thought I knew, but I don't know what it is. Can someone tell me what it is? Anyone?
Go ahead, Paulina.
Well, yeah, a meme is essentially like it's a new thing in this like generation where they use pictures or like GIFs in order to like talk about a certain thing, but the message is through a picture. Okay. It's not the best description, but it's like a euphemism, but modern euphemism of like using a picture or a GIF or some sort of graphic.
So from my era, one of them would a meme be remember the Charles Schwab baby in that commercial where he's talking to the old adult like an adult, but he's a really little.
I love that. I do remember that. Did I send that to you?
Yeah. Is that kind of like a meme or something?
No, you go ahead.
No, I don't know if it is or not.
I'm not sure I know the reference.
That's because I said my generation. You're way younger than I am. That's why I said it that way. See? I avoided all possible controversy by saying it that way. Okay, so anyhow, I don't know why this is called meme stock because this guy Roaring Kitty was
Gill.
the one who did Keith Gill, who started the first version of GME, kind of making its elevator up move. There's a lot to talk about here. I know Paulina. We only have Paulina for a little while every Friday, but we're going to do our best. But he's come back in essence. So Paulina, tell us about what's going on. Maybe we can have a little breakdown of some of the things that are going on behind the scenes relative to this.
Yes. So within the past couple of weeks, it seems like we've been seeing a comeback of these meme stocks where traders are piling into GameStop and AMC. These are the two meme trades that are seeing the most volume, but those are just a fraction of the meme stocks that traders are looking at. And I think an important question is, what does this meme craze and speculation, what does this tell us about the market we're in right now? At first glance, this activity may not make a lot of sense, especially for long-term investors who are focused on the fundamentals. They're investing in companies that actually have strong sales and make a profit. These stocks, these meme stocks, they're not trading on fundamentals.
Right.
So I'll take a pause there.
Yeah. So good. These are great points, by the way. This is like Molly, high octane energy drink for stock traders or option traders.
It's like
you want to run a marathon like that. Too much caffeine in the memes.
Right. It's like burning sugar versus keto, something more fundamental. So, Paulina, what does this mean for the broader market? So how is this affect? Is there, do people see signs of volatility? Is it, a refocus on the retail trader? Is it sort of a highlight of Keith Gill's, power over the populace? What do you think this means?
There are a lot of interpretations as to what this could mean because the last time it happened was during the pandemic 3 years ago. Obviously, that environment was really different than the market environment we have today. But the general consensus is that this is happening because there's a sign of risk appetite in the market. People are they essentially, you know, want to see maybe more returns out of the S&P 500, 7 to 10% annualized returns. So they might want to put a little bit more capital at risk in order to, let's call it what it is, gamble and hope to make a return from that. So I think
so. Lex is right. It's a sugar high. It's a junkie high. I like it.
Right.
So,
definitely is.
You know,
Yeah. Go ahead, Molly. Sorry.
Yeah, I'll say one thing that I might debate that, you know, they're saying it's purely speculative, you know, fundamentals taking a backseat here. But when you really talk to people of when it began 3 or 4 years ago, I would say 4 because it was a buildup. When you went on Reddit, you know, people really loved GameStop. We'll just talk stop hold off on AMC for a second, but you know, it was almost went in there because they loved it so much. They loved the experience. Save and I think began there to something else, but those are these new, you know, sentiment fundamentals being brought in that, you know, artificial intelligence can kind of source for us. That is a new perspective, and these are new data points that we're pulling in. So I might debate the fundamental thing a little bit. What do you guys about that?
Yeah, I think you guys are on the same page. I'm on the same page too relative to fundamentals. But here's the deal. So this every meme stock. Okay, I'm adopting the word. I don't even know what it means, but I'm adopting it. Every meme stock needs a catalyst. Okay, it needs something to push, and I always liken it to pushing a snowball over a hill, and it grows momentum, and the snowball builds, and it grows more momentum until it crashes into something and dissipates and gets.
And Lex, let me interrupt you because Lex, let me just point out that this is Lex's amazing perspective that we don't see, that the news does not talk about, which is the market maker perspective on this third component that feeds into all this. So continue. This is good.
Yeah. So what happens on these things? Few things. So there's different players in the marketplace who are either making markets or taking them. The Reddit community, let's call it the Roaring Kitty community, Gil, they are one part. They're the retail part of it. They're the ones who initiate the first purchase of something. It can be stock, it can be options, whatever. It needs to have force because they in and of themselves aren't big enough to make a market making community or an institutional community even take a gasp. Okay. Now you need a lot of them to get to that critical mass to make it effective. One of the things that happened in the first GME that probably happened in the second GME is it probably wasn't the most liquid trading stock and options product, right? Which is fine. It is what it is. So when that happens and you get a big buy-in from the Reddit community, which all of a sudden grew massively across all the channels, you have everyone piling on, and now all of a sudden it looks massive, and market makers are selling calls, stock market makers are selling stock. Don't forget, institutional players are out there who are hedge funds and the like. They had a big short position. It's all going against them. And market makers are hedge delta neutral people. So they've got to go jump out and buy stock when they're selling calls to cover that short delta. So they're adding to the fuel too. Everyone's adding to the fuel in a different way. Hedge funds are covering because they're getting margin called. Market makers are buying stock to hedge their positions. Implied volatility of those calls is skyrocketing, right? Implied volatility I saw was 700. That causes market makers to get even short more deltas, which case they have to hedge with more long stock. It just and that snowball is massive.
Is that a gamma squeeze? We call it a gamma squeeze.
Yeah, it's gamma squeeze. It's something called Vana too. But there's a Vana squeeze involved. So everything gets squeezed. And I was talking to one of my market maker pals the other day about this, and they trade this product. And I guess GME kind of made a backward turn and it kind of sold off a good bit. And I haven't paid attention lately, but I don't know where it is now. But it sold off. And what happened on the sell-off is implied volatility in the options got hammered. It got crushed. Very unusual for down moves in stocks or anything, indices for that matter. Usually implied volatility goes up in these down moves. But in a meme stock, it's completely the opposite of because of what the sentiment is that is going on. Does that all make sense? A little bit of sense.
Yeah. Well, and why is that? Why did it go? Why did it turn in reverse?
Well, because now all of a sudden what happens is that everyone's playing to that upside move and the violent upside move. It's the violent part is important. So that sort of velocity of an up move is really vital. When you have that, it causes the players behind the scenes, the other participants in the market, to have to hedge their positions, and they're doing it rapidly. These guys are machines now. They're not individuals like I was on the trading floor. They are doing there's a machine buying stock from somebody, and somebody's got to hedge it, and just it keeps playing on itself. And when that stops and it goes the other way, there's no more of that. People's like, oh, party's over. Let's just bang this stuff. Excuse me.
Oh,
so
got it.
A lot of that's going on.
Are we going to see this happen again, Paulina? Oh, go ahead.
Oh, sorry.
Go ahead, Lex.
Well, that's a good question. I think to Lex's point, I think that breakdown is really important because I guess it's hard to wrap your head around that all this activity is done by individual traders. People were wondering, where's this volume coming from? Is it institutional trading, retail trading? So I think it's important to, break down who all the market participants are and know that each kind of has, they have their own goal to, they have their own goal to make money, but I guess in different ways. But at the end of the day, that activity is being shown through the volume there.
Right.
In terms of will this happen again? It could. I think that if we take a look at the meme craze now versus when it happened a few years ago, that, like I said before, the environment is different because before, during the pandemic, we were locked in. People were kind of betting on the market to entertain themselves. Also, right now, the consumer is pretty pressured. Credit card delinquencies are pretty high. Inflation is still an issue. And people don't have too much excess money to play with. So I think it could.
And conversely, may not have a lot to play with, but I think people are feeling the pressure and needing a side hustle, which is why options trading is skyrocketing because it
feeling FOMO too.
Yeah.
Yeah. Right. Exactly.
Right. FOMO. That's for sure. So don't forget though, this is, and I want to clarify, this is not an investment strategy.
Right.
It's not at all. This is a day trading gambling mechanism for the people who initiate it. The Keith Gill guy, he has every good intention, and he's not wrong to do this, right? He has a platform. It's legal. He can say in his Reddit community that he's buying the stock. He's doing it for real, and it's causing an effect because he's got a big following behind him. He's putting his money at risk. People might not follow him, and it might go against him, and he might lose money. That's how it goes. If he wants to do that, so be it. He's in the market for a very different reason than fundamentals, right? Totally different. He is in for a DraftKings FanDuel hustle for himself. That's it. It's okay. It's one way of trading. And I'm not saying it's the best way. I'm not saying it's the worst way. It's his way. That's what he likes to do. So he was clever, I thought. He picked something up. People, clamped onto it. They hitched their wagon to his train, and it caused this massive ripple effect that just wafted this thing. The first run in GME, that stock went from about $17 to $500 in 17 trading days.
Whoa.
Crazy.
Yeah,
that's crazy. I will say that we're going to, sorry, Paulina. I will say we're going to see more of this. I think we'll see an instigation of retail traders backing companies that they love, and then technical day traders coming on and hitching a ride on that. I do think we're going to see a little bit of that upward momentum and that kind of change in how we trade going forward. And I do know that the market makers eclipse retail traders at this point, but I hope to see that change one day. And I think with, all the information we now have in our back pockets, we have a competitive, safe stance to play in the field. But I think what would be interesting to see with you here, Lex, is, the capital requirements were 100% overnight when they started to see that volatility. And I know you spoke about volatility going the other way, but talk about a brokerage's pressure with the DTCC and what those requirements are and that part that plays.
Yeah, I don't off the top of my head, I don't actually remember the exact requirements, but I've seen it a little bit in my career over the long part that it's been, where the regulators have stepped in and put the throttle or pulled the throttle back, put the brakes on, safety brakes. Right. And then, I don't know if you probably don't remember, but the circuit breakers were put in because of the crashes that happened in the late 80s and early 90s to like prevent
crash and
prevent that wildness. And 10% down, it stops and resets itself for n number of minutes, and another 10% it stops again, and I can't remember the next percent, it's done for the day. So all that's just put in place to ease that sort of velocity. And don't forget, the velocity was always to the downside. They put those in for downside circuit breakers because of crashes. Crashes were always thought to be huge velocity downward, but never did they see an upward momentum move, not so much in the market, but any individual stock like that, that could cause this sort of slight panic. So, the regulators probably stepped in, and I think one of the brokerage firms, and I'm not going to name names, but sounds like steals from the rich to give to the poor. Did I say that? Did I just say that? One of those kind, that they probably were getting overwhelmed, and they probably put on their own kind of breaks. I don't know that to be true. That's just speculation. It might not even be true.
I do think the CEO mentioned that if he didn't put the brakes on, his company would be out of business. But due to the capital requirements, due to those DTC capital requirements, and then when you start to look behind the alphabet soup, I won't put my shtick there, but it's interesting.
Yeah, and I don't like to opine on brokerage things because I'm not on the brokerage side, so I'm just a
no. I think brokerages are doing the best they can. It's a lot of the infrastructure behind them that puts the pressure on them, and you also see the SEC putting best interest. So Reg BI is coming in place, and you have gamification is on the table to start. So this is I'm glad to see that I was excited to see Keith Gill come back to bring this back to light.
Yeah, I wish I had known. GME was so low. I would have just taken a flyer. Honestly, I would have. I don't pay attention to the markets enough individually like that. But I would have taken a flyer on not so much stock, but maybe some call spreads or something funky with calls, just in case he came back. Well, I would have been right. I missed it, and you would have killed it. You would have killed it. So
give a position, like not advice in any mean, but what would you have done? Like what would you do now?
I don't know. Here's what I would tell you. Some of the things I could have done. I just don't know enough about implied volatility. I'd have to look at that. But let's say implied volatility was low enough where I could buy 2 or 3 calls to every one I sold. I'd put that position on for even money if I could, out of the money, and kind of post-date it a little bit so I give myself time. And then I've got extra call units long against my short in case this thing happens. If that happens, I utterly destroy it. I just kill it.
Right.
If that happens, and I don't lose much if nothing happens. I might be doing these things for real small credits or real small debits, and they're it's gambling. It's a lotto ticket, but it's probably a little bit educated. I see the time, and I know Paulina's got to run. So
I do want to mention a few things before I go that we didn't get to.
Yeah.
First, as we kind of alluded to before, these meme stocks, they're not trading on fundamentals. Yes, they're very cheap, but they're weak companies. GME, GameStop, they sold stock actually last week, and they provided a negative outlook. And we should point out that the rally in these meme stock has cooled. GME actually fell after it announced that they were selling stock. Also, taking a look at the environment right now, the stock market environment, I think another reason why we shouldn't kind of be surprised as to why people are piling into these meme stocks is that there really isn't a short-term catalyst in the markets right now. Earnings are months away. Everybody is hyper-focused on the Federal Reserve. So I think that's why you're kind of seeing people take more risk in the market and kind of rally on Keith Gill's tweets. So some fruit for thought there.
Yeah, I agreed. Very well put, Paulina. Thanks for this. This was a good one. You have a great weekend, And we will see you next Friday on the Brew. Thanks
Good
for coming
seeing you
on.
guys. Thanks.
Bye, Paulina.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.